Time for a breather, maybe. And I think that's the sum and substance of today's trade setup. Thanks so much for tuning in today. Let's start off with the global news flow. The Times of India reports that Prime Minister Modi and Xi Jinping may have bilateral talks at the Shanghai Cooperation Summit. PTI says that India is in talks with the US to procure some drones for over $3 billion. And India also has some drone policy that is likely to come up. So that might aid, that might just be in focus as well. The whole defense mechanism continues. All is extended the weekly drop as traders weigh more Iranian supply, possibly even demand concerns. By the way, I must say, across the world, drought like scenarios are creating stress on an already snarled supply chain. Prices might move up. So the narrative of peak inflation may not necessarily mean a nosedive in prices in the winter season for Europe and US as well as for India, by the way. So the US markets had an iffy day on Friday. The futures are still lower. So we'll suffice to say the stage is set for us to not really have a great start today. Can we build up from there? Remains to be seen. But don't rule out a pullback, right? We've had such a superb sparkling rally that at 100, 200, 300 points pull back in the Nifty shouldn't come as a surprise to anybody. Could it be more? Sure, could be. It'll be interesting to see that. But for now, all I'm saying is that if there is a pullback, and that's what we can see thus far right now, it shouldn't come as a surprise to anybody. So keep that at the back of your mind. The other indicator should come up on your screen next, and the dollar index at 108. That alone should be a reason why people should be a bit circumspect about what could happen ahead. Risk assets and Bitcoin might be showing this uptick of 0.77%, but largely has come off from those 25,000 levels. The US 10-year yield at near 3. So both the dollar index, the US 10-year yield, as well as what the world markets are doing, should serve caution to Indian investors. The one thing that is working for us is crude prices, which are coming off. But aside of that, no major cues that would be helpful from a trade perspective. So, and you know, the other part is, viewers, Friday, this is the SGX Nifty, of course, indicates a start, which is just 65 points. I would reckon maybe there could be more in store. But yeah, we had a bit of a pullback in Friday. And the key thing, I mean, you know, I want to bring that up in the trade setup. The key thing is that Friday actually saw the highest average daily traded value since mid-April, with banks proving the weakest link. So banks came off, which is a high weightage, very high average daily traded value, and the markets came off. So markets came off on fairly high volumes. The weak global move, the higher weeks are indicative of the soft start to equities today. So no brainer there. And rate sensitives may be in focus. Keep in mind the MPC minutes also kind of spoke about how the actions from the Reserve Bank of India haven't hurt growth. Therefore, kind of were not dovish to my mind at least. So, uh, be that as it may, the point is, irrespective of what's happening, because irrespective of the narrative, the price action in real estate stocks wasn't the strongest. It shed a lot of weight in the August series as well, and maybe reaching near technical supports is what people say. Though I must admit that the calls today on some of the technical experts or derivative experts are still for weakness in some of the real estate stocks could continue. Friday saw DLF, etc., all come off quite rapidly, so keep them in the back of your mind. FIs bought, but DI sold about 1633 crores. It's very interesting how the converse happens all the time. But yeah, for now, DI sold about 1633. FIs bought about 1110 crores. Stocks to watch today. Again, post result season, the news flow has just dwindled, really dwindled. Not too many market or stock moving news flow is the point I'm trying to make. Adani Power, well, Adani Power has agreed to acquire about DB Power's assets at an enterprise value of 7,000 crores. It operates two 600 megawatt thermal plants in Chhattisgarh. Um, but yeah, so the Adani Group stocks remain in focus. By the way, this news came out in the fag end during market hours, but still important to highlight that Adani Enterprises has made the 3.9 billion open offer for the two cement makers, which is Ambuja and ACC, and therefore it keeps all these three firmly in focus today. Duration of the open offer as well. Maybe the stocks get a bit of a support until that gets over. Some stocks in news may not move the needle too much, but yeah, that's standard disclaimer, of course. Now, some stocks in news and may won't move the needle on Paytm, but Vijay Shekhar Sharma, there's a lot of talk about whether he will be voted to keep as to be kept as the CEO or no. Thumping majority, by the way. I think 99% or thereabouts. So no issues thereof. Central Bank of India likely to exit RBI's PCA framework. Or CAMS, the Great Terrain Investment sold about 1.86 million shares in CAMS as per BSE. So 2 or 3 in focus. IIFL Finance also was in focus, by the way, because of the sales that happened from CDC or the purchase that happened from a bunch of very interesting investors. Some brokerage calls include a Case International, Nomura's note out there, a buy with the target price of 566, up from 515 previously. I believe the EBITDA margin will improve second half FY23 onwards, reaching 10% in fourth quarter of FY23. So there is a narrative around EBITDA margins improving that Nomura believes in. The strong order pipeline will support order inflow growth of 17% YOY in FY23. Working capital levels will normalize from FY23-24 as the railway projects execution crosses some milestone payment threshold. And they've given a whole para out there about why this would be important from a working capital perspective for KEC International. And at about 10 times FY24 EPS, they don't believe it's expensive. Do watch out. I mean, based on the current target price, there is an uptick of about what 39% or 40% that Nomura envisages in KEC International. Everything related to power and infrastructure is, of course, doing well. The other piece is GAIL, wherein Kotak Institutional Equities as a sell with a target price of 115. They've recently downgraded the stock to a sell. They've argued that it faced headwinds in each of the key segments, which is gas allocation for consumption and transmission, which has been cut by 30%, or regulator has cut tariffs in 3 of the 4 regional pipelines by 41 to 98%, or with rising HH and falling oil, spreads on oil-linked sales of HH volumes have compressed and will get negative soon. So 3 or 4 pieces wherein Kotak doesn't have comfort and they've downgraded the stock to a sell. So do watch out for that one. Some trading recommendations in a market which might otherwise be weak. ICICI Direct has a buy call on Tata Communication. They believe that 1080 will act as a good support, and they believe the stock will perform in the expiry week because it has given a good breakout last week, and there's good headroom for long additions because hitherto the rollovers aren't exactly hunky-dory. Very low rolls thus far, so there's good headroom as well according to them, their analysis, by the way. Or Godrej Properties, which has corrected already about 10% in the series thus far, but they believe the stock may move below 1300 in the coming days because it failed to capitalize on the sharp rally, and it's witnessed fresh short addition from higher levels in the past 1 week. So do watch out for that one. I haven't given the names of IEX because I mean, this whole belief, right, that there's bad news in IEX, but states have now started resuming paying to the center on discount dues, and that may aid the volumes on IEX, or not hurt volumes on IEX, or Kotak, which did not make it the list of FTSE rebalancing. Maybe that has some bit of unwinding today. Or Greenlam, which has started a new facility. Who knows? That might be interesting. Last but not the least, before I leave you, while there's a lot of talk of what the first half had in terms of FI outflows, BofA Securities has come out with a note on 19th August on flows. They say the emerging market funds have turned to India and have dumped China. They've increased allocation to India to 19.7% versus 18.1%. They've cut allocation to China to 36.2 versus 39.4. A recent past, of course, but it's interesting what EM funds are doing with India. I remember Ruchir Sharma has launched an EM dedicated fund as well. A bunch of funds are launching at an EM ex China, and therefore India's weightage naturally in those funds would also go up. So yes, emerging market funds are turning to India. Maybe that is the reason why we've seen consistent inflows over the last few days. And that's welcome, really. After 40-50 billion dollars of outflows, we can do with 10-15-20 billion dollars of inflows for sure. Nevertheless, that's the long and short of it. Patanjali, Kotak, maybe have some interest today. By the way, yeah, sorry, I forgot. This is an interesting one. We'll be talking about this piece all through this week. Is this the time to check in or check out? It's a very important juncture, and we got you some of the best minds, both global and local, all of this week, starting with Andrew Holland today. We'll have Ganeshram Jayaraman of Spark Capital. We'll have Rahul Chadda of Mire. Some fairly interesting voices lined up all this week with this very topic. The talking point for this week would be, is this the time to check in or check out? You might want to tune in for all of these conversations, probably help you take a decision on the trading side as well. Thanks so much for tuning in today. Have a safe day ahead, and yeah, be careful. I know COVID is a thing of the past, but cases in Mumbai at least have really risen. Maybe the rest of the world too, maybe the rest of the country too. So be careful if you're stepping out. Is the limited point I'm making. Thanks for tuning in today.